By the way, when a central bank maintains reserve of foreign currency, gold forms part of that reserve. That is, when you count the total value of reserve, gold's value at that particular point of time or at the historical cost would form part of that reserve. Hello and welcome to the Sharad Kohli show, where I try and make the complicated concepts of economy, business, finance, taxation, investment, stocks very easy. I try and put them across to you in very simple language to keep you updated, to keep you posted, to help you plan better, to help you make your wealth grow, to help you make your income grow. If you like the contents of this channel, I would humbly request you to please do subscribe. Please press the bell icon as well so you get the notifications on time. Please also comment. I'll try and read through them and would like to include. This channel has been created for the audience on my Hindi channel, the Sharad Kohli Official, where a lot of people suggested that there is a certain audience who feel more comfortable in English. They may be based out of South India, they may be out anywhere in India, and of course some of them are overseas. So we're going to talk about why central banks around the world are buying gold. And by the way, central bank is the main bank in the country. For example, Reserve Bank of India in India. For example, the Federal Reserve in America. For example, Bank of England in England. For example, PBOC, the People's Bank of China in China. Likewise, every country has a central bank. And as you know, these central banks are monetary policy controllers in their respective countries. Most of them play the role of monetary policy controllers, which is why the meeting that they hold every couple of months or 3 months or whenever, that is called a monetary policy committee meeting, where they take a call on interest rates, they take a call on various currency, lending and other issues, basically monetary issues. Now, the biggest collector of gold across the world is America. It is said officially that they have over 8,800 tons of gold in their Federal Reserve. And by the way, when a central bank maintains reserve of foreign currency, gold forms part of that reserve. That is, when you count the total value of reserve, gold's value at that particular point of time or at the historical cost would form part of that reserve. So, forex reserve of any country does include gold as well. When you hear the numbers, always have a reason to believe that gold is included in this. But what has happened over the last few years, I would say about 3 to 4 years, these central banks have gone very aggressive in buying gold. Now, why? I mean, a normal household, for example, in India or China, would buy gold as a safe haven asset, as a risk hedge, as a hedge for inflation, as a probably companion when the times are difficult, and of course for investment, because of the way prices have been rising over the last 3 decades or so. You know, it has also added value to the reserves which the banks have created. You'll be surprised that for similar reasons, of course there are a few more, that a household buys gold, the central banks have also been collecting gold. Let's dissect some of the other reasons a little in detail. I'll try and keep the video short so you get a glimpse of what's happening around the world, what transformation is happening around the world. And by the way, this buying of gold by the banks is part of a transformation which is happening in the global fiscal, in the global monetary scenario, and of course the global economic scenario. Well, prior to 1971, there used to be a gold standard when Richard Nixon used to be the American president. Of course, being an American president, he had all the reasons to make dollar, the currency in US, to be more popular, because then gold used to be more popular. Gold standard meant that the strength of the currency of a country was based on how much gold that country had. And President Nixon, or late President Nixon, shall I say, changed this whole practice. It is then that dollars started becoming the king of the world. And today, 60 to 70% of the trading around the world happens in US dollars. More than 70% of the reserves which the countries have, I'm talking of the forex reserves, they are in US dollars. Lending, about 80% to 90% lending happens in US dollars. So basically, US dollar became an international currency with the efflux of time. with the time lapsing, the country started realizing that probably dollar may not remain supreme for a very long time, which means the reserves which they have in their respective central banks may be worth nothing after some time. And especially after President Trump came, and the new policies of tariffs, which created furor around the world, which of course disrupted the supply chains, which also fueled inflation within America, which led to complete, I would say, turning the table in terms of how the trade is done across the world. And then came Iran war, the Iran, Israel, and America. So prior to that, or prior to, shall I say, the tariff regime, essentially, although it started happening a few years, but this speeded up after the tariff thing started, the reciprocal tariff policy which America implemented from the 2nd of April 2025. Well, prior to that, the countries used to have a lot of faith in the US Treasury bonds. Well, American government or American Federal Reserve issues Treasury bonds, where countries invest. You'll be surprised. I know countries, I'm not going to name the countries here. You can Google and find out easily. There are countries who had up to $800 billion of investments in US Treasury bonds. Such was the confidence. $200 billion, $300 billion, $500 billion was a normal. That is, countries have so much faith on the US Treasury bonds and on the US country, or as a country as a whole. And of course on the currency, that it was all the surplus was being invested in US Treasury. Now, ever since the faith was shaken, ever since the confidence level went low, the countries gradually started liquidating their dollar investments in the US Treasuries. Heavy liquidation over the last couple of years has happened, so that I know. And you will, if you Google it out, you will find that a lot of central banks have accepted. They may have accepted very openly. Some have accepted in a very low voice. And some revelations have come through various sources. But this is true, that a lot of central banks have now replaced substantial quantum of dollars with gold. What does this mean? This means that they are all believing that gold standard, which was there prior to 1971, is going to come back, which means the strength of your currency will be determined by the quantum of gold that the country or the central bank has. That will be a huge transformation, isn't it? Imagine a situation where dollar is no more the Badsha, the king of the world, and the best measure of value around the world is gold. Gold is not going to become a currency for sure, but then gold will become the backing of the currency, the backup for the currency, if I may put it in that manner. And of course, the central banks also feel that this is also a safe haven investment. This is a risk hedge. This protects the country against inflation because they don't need to print too many currency notes. Geopolitical risks. We know today we are living in the era of war. Iran, Israel, America. Russia, Ukraine for the last more than 4.5 years. China, Philippine tensions, they keep erupting. China, Taiwan, an eternal problem. Afghanistan, Pakistan keeps erupting every now and then. Russia, Ukraine. It's just been crazy. So therefore, the threat of world war or the threat of geopolitical risk is becoming more and more real. And the banks feel that gold becomes a risk protection. Gold becomes a safe haven. So protection against risk as a safe haven, geopolitical risk as an alternate to US dollar. Making investments in gold is now considered as a better investment by these central banks. So we are witnessing transformation, a never before transformation in the living memory of the people, unless they are very, very old. Prior to 1971, people who are, at this point of time, 70, 80 years old, they may have probably witnessed what gold standard used to look like. And that is one of the reasons why gold prices have shot up. Of course, they are now going through a bit of a consolidation corrective phase, but this is an aberration. The trend basically is upwards. All larger institutions around the world, they believe that gold prices are going to go up in the longer run. And if gold standard comes, or if I put it in a different way, if de-dollarization happens, gold prices are going to break the roof and probably go to the next level, considering that there isn't much gold left in earth to be mined. It is said that only 70 to 80,000 tons of gold is left to be mined. And on an average, about 5,000 tons to 7,000 tons gets mined every year, which means in about 15, 20 years, there'll be no gold left in earth. Of course, they say that there is gold underwater, under the sea as well, but it's impossible to extract it, impossible to mine it, or either the cost of extraction is so much that it's unviable. So unless there is a technique where you can spot gold which is hidden somewhere, which we can't see today, which we don't know about today, gold is going to finish as far as mining is concerned in the next 15 to 20 years. And then what happens? It becomes a scarce commodity. Apart from being a sought after commodity, it becomes very scarce. So that is why the central banks really want to grab gold. Look at PBOC, People's Bank of China, consistently buying gold. Across Europe, a lot of countries, Spain, Germany, Belgium, France, Australia for that matter. India also, whenever it gets an opportunity, it consolidates its reserves. And I can tell you one thing, that countries may not necessarily disclose at the time they are buying, even after they are buying. But then the reports do come out over a period of time when they have to declare their total gold reserves. And of course, if the gold standard comes back in the times to come, we will know that which country has how much of gold, because the currency value would be determined by the quantum of gold, as I said. I hope it is now clear to you as to why central banks around the world are gold collectors. They are behaving pretty much like retail investors who keep accumulating gold at every opportunity, at the Dhanteras or at a Nakshaya Tritiya or during a wedding. Central banks are no less in trying to grab gold whenever they get a chance. I'll connect with you again with another topic based on economics, business, finance, taxation, stock markets, investments, and so on. So until then, goodbye.